And welcome to NTD Business. I'm Don Ma. Wall Street rose today. S&P 500 gained 13 points or 0.2%. NASDAQ gained 87 points or 0.6%. The Dow rose 33 points or 0.1%. The tech-heavy NASDAQ rose amid investor excitement about artificial intelligence. This is ahead of earnings reports from mega-cap technology companies Alphabet and Microsoft after the bell. Most of the 11 major S&P 500 sectors were subdued. But materials stocks gained, tracking rising metal prices as investors cheered pledges of support from a Politburo meeting in China. S&P 500 earnings are now expected to decline 7.7% for the second quarter. This is according to Refinitiv data. And gas prices saw their biggest one-day jump in a year, bringing to an end the months-long calm in prices at the pump. Now, according to AAA, the national average price of a gallon of regular gasoline increased 4 cents on Tuesday to $3.64. It's the biggest increase in a single day since June 7th, 2022. And it marks an increase of 8 cents over the past week. Now, even so, prices are still down by 72 cents a gallon from a year ago. Last summer, they spiked to more than $5 a gallon. Tuesday's jump comes after an increase in oil prices, which have climbed to 3-month highs. And it seems like U.S. consumers are optimistic. Confidence increased to a 2-year high in July, though worries about a recession haven't completely disappeared. This is according to a survey today. The Conference Board said its Consumer Confidence Index rose to 117 this month. Now, this is the highest reading since July 2021. The Conference Board's chief economist says, quote, greater confidence was evident across all age groups and among both consumers earning incomes less than $50,000 and those making more than $100,000. Though consumers' perception of the likelihood of a recession over the next 12 months ticked up, but remained below the recent peak earlier in the year. About 70.6% of consumers this month said a recession was somewhat or very likely, up from 69.9% in June. The impact of artificial intelligence is already having an impact on the workforce, it seems like. Here are the details.
Is artificial intelligence coming for your job? There are growing signs that AI is already disrupting the global workforce, and experts say it's just the beginning.
There are people who will learn to use AI, and they will take your job because they will become significantly more productive than you will be if you're not able to partner with an AI model.
Goldman Sachs economist predicting 300 million full-time jobs could be affected by the latest wave of AI, which has created platforms like ChatGPT. And a new analysis estimates nearly 80% of women could be disproportionately affected by the adoption of AI. That's compared to 58% of working men, according to research from the University of North Carolina.
The world has changed. These are new tools. You can't fear them. You just have to learn to use them.
All that is already impacting nearly every industry, from art and music, where AI-generated songs are more affordable since there's no producer, composer, or artist to pay.
It's taken away opportunity from songwriters, producers, and artists, right? So the people are trying to feed them for their families.
The manufacturing sector also seen an impact. And then there's fast food, where AI is ready to take your order.
Classic or bacon barbecue mother cruncher.
Places like this Checkers restaurant in Iowa are already using AI for their drive-through window.
Whatever the guest says, it will react to that. It's crazy. And they'll just start a conversation.
The U.S. semiconductor industry faces a shortfall of roughly 67,000 workers by 2030. This is according to an industry association study on Tuesday. The study is by the Semiconductor Industry Association and Oxford Economics. The chip industry's workforce is projected to grow to 460,000 by the end of the decade. But at the current rate that people are graduating from schools, the U.S. will not produce enough qualified workers to fill those positions. The projected shortage includes computer scientists, engineers, and technicians. Roughly half of the future chip industry jobs will be engineers. The shortage of skilled chip workers is part of a larger shortfall of science, technology, engineering, and math graduates in the U.S., according to the report. By the end of 2023, 1.4 million positions may go unfulfilled. A prop rental shop in LA is unnaturally quiet. There's no one looking for set design items as the writers and actors strikes continue. NTD's Andrew Thomas has more on how the strike is disrupting businesses.
Mark Meyer thinks his prop rental business may have a month or two left. He supplies items for movie, TV, and commercial productions. Soon he'll have to make the difficult decision to start auctioning off thousands of items.
Our income has been slashed drastically. It was like $140,000 a month. And now with all the bills and everything, I'm kind of hardly going to make $10,000, I think.
His business has supplied items for movies like Top Gun: Maverick and TV shows like Good Trouble. Hollywood writers have been on strike since May and actors since mid-July.
So we left the tags on because the decorator wanted them for that set. And hopefully when the strike is over, they'll come back and redo that set and that same script and pick these up again.
But the company is on the brink of going out of business. Meyer has already closed temporarily. He's laid off his entire staff, except for one employee.
I've got all of the employees after COVID came back, except for two, and they're like my family. You know, I hated to lay them off because they were like my family. They're family members to me, you know.
The inventory of desks, chairs, lamps, and other office-type decor is gathering dust. Marvin Figueroa is Meyer's last remaining employee. He fears Faux Library will close permanently after surviving the global pandemic.
I'm thinking this is probably worse than COVID, I would think, right? Because there was like an ending and there was something going on with COVID. This don't seem like it's going to end. They're not going to negotiate it, and I don't know. Hopefully we'll stay in business.
As the strike continues, scores of businesses that support the movie and TV industries are fighting to stay afloat. Andrew Thomas, NTD News.
And the familiar Twitter sign started coming down at the company's San Francisco headquarters on Monday as part of a new branding. After 17 years with an iconic blue bird logo that came to symbolize the broadcasting of ideas to the world, billionaire Elon Musk renamed Twitter as X and unveiled a new logo, marking a focus on building an everything app. Since taking over Twitter in October, Musk has said he envisions an app that could offer a variety of services to users beyond social media. You know, for example, peer-to-peer payments, an idea that mirrors the widely popular WeChat app in China. And FedEx pilots have rejected a tentative labor deal that included a 30% pay increase. The package included an equal boost in their pension benefits. The major objections from the pilots are not yet clear. 57% of the FedEx pilots who belong to the Airline Pilots Association voted against the proposed contract. The contract was reached in May and endorsed by union leadership. Even with the no vote, the 5,200 FedEx pilots won't be able to go on strike anytime soon. That's because there are a lot of hurdles that have to be cleared first. The union says it will go back to the bargaining table in search of a deal that membership will accept. The rejection comes amid a well-documented pilot shortage nationwide for both passenger airlines and cargo carriers. The shortage has put pilots in position to win large pay increases. For example, United Airlines just reached a deal to give its pilots a raise of up to 40%. And finally, UPS and the Teamsters union have reached a tentative deal on a new contract. The agreement still needs to be ratified, though, and a no vote could still trigger a strike, but it will then take place in late August. Here are the details.
UPS and the Teamsters union said they've reached a tentative deal on a new contract for about 330,000 UPS employees who prepared to walk out next week.
This is good. This is a start.
Those workers need to ratify the deal to avoid a work stoppage that would hit in the middle of the back-to-school shopping season, which the National Retail Federation estimates will generate $41.5 billion in spending. NRF says supply chain crises sparked by the COVID-19 pandemic prompted retailers to better anticipate disruptions.
We're obviously in the middle of back to school. That product is on shelves and stocked already. Heading into holiday, we know retailers are already in a good place with inventory and thinking ahead need.
And consumers adapted too, starting shopping early to find deals to counter inflation and to get what they want.
There's a lot of tools out there. We know consumers have become adept at using them, and retailers have certainly built in their own systems for communicating with their shoppers about what is available and when and how long it might take to get to them.
UPS handled an average of 20.8 million domestic packages a day last year. Anderson Economic Group estimated a 10-day UPS strike would cost the U.S. economy $7.1 billion.
While the Postal Service and FedEx and some other delivery channels may pick up some of the slack, there aren't enough options available to the businesses and consumers alike today to replace the volume that UPS handles.
And now here to talk to me about the deal is the president of the National Right to Work Foundation, Mark Mix. So Mark, have UPS workers been treated unfairly? I mean, what's the dynamic here?
Yeah, well, UPS drivers are making on average $95,000 a year. And the Teamsters Central State Pension Fund for retirees and everybody else the Teamsters represent just got $36.4 billion from the taxpayers to support their pension program to make sure that all benefits can be paid through 2051. That's another story that's kind of lost in this whole debate about UPS going on strike. I think that there's workers out there that think they're getting a good deal. I mean, you know, they've already settled on air conditioning in the trucks and fans in the trucks that are a little bit older. I mean, there may be some that's saying it's unfair. Sean O'Brien talks about poverty wages for these people. And so the rhetoric out there indicates that, you know, this is a really terrible place to work and UPS is not treating them well. But I think there are folks out there that like their job, they like their pay, and there are conditions, obviously, that workers are going to argue against. That happens in every business, and particularly one this size with 340,000 employees. There's going to be someone out there that's not happy, I suspect. You know, the impact on these workers, and let's look at it from a Teamster driver perspective. If you go out on strike, you get what's called strike pay, but you're going to make about $1,400 less per week for every week that you're out in your paycheck. The strike pay is not going to make up for the full salary. So if you stay out for 15 working days, you're losing 3 weeks of pay, which is about $4,000. For part-timers, they're going to lose somewhere north of about $200 a week in pay if they go out on strike because the strike benefits won't compensate them fully. And so there's a real financial risk for these employees, and possibly everything they gain at the bargaining table may be lost because they've been off the job for 3 weeks. I suspect there's a lot of Teamster drivers that are concerned about that. And we knew from the last strike, we represented literally hundreds of employees, helped hundreds of employees that wanted to cross the picket line and go to work because they needed to feed their families.
And Mark, what would have been the impact of a strike?
Yeah, well, first of all, some people that study this very, very specifically said that a 10-day strike would cost UPS about $7 billion. From an economic standpoint, from a customer standpoint, a customer-facing standpoint, UPS has about 24 to 25% of the entire market share of the parcel business. So they're delivering anywhere from 18 million to 22 million packages a day. Now, obviously, there's FedEx, there's the United Postal Service, there's Amazon that provide these same kind of services. But really, UPS is the big player in this business. So there's a risk for UPS and market share. I mean, FedEx has already indicated that customers can come to them. They put out some notices about a month ago saying, if you're interested in making sure you got continuity, let us know now so we can set up the structure that allows you to do that.
I mean, it seems like Teamsters have tremendous leverage here.
They absolutely do. And that's a great point, Don. I think that what's happened is the environment has encouraged this type of leverage, this kind of force. I mean, you know, they've got an additional incentive. They've asked the president to stay out of it, President Biden to stay out of it, just like they asked President Clinton back in 1997 to stay out of it. But I think there's whispering from the White House about, you know, how can we help get this done, because they consider this summer to be a really important year for organized labor. We've got a UAW strike that's looking at us in September. The UAW contract with the 3 automakers up there expires on September 14th. We've got yellow freight lines that just barely surviving financially, where a strike was prevented that was supposed to start yesterday morning, but they got a little bit of a reprieve. So there's lots of action on this front.
Okay, just one final question. I mean, is this going to be a regular thing? For example, if when this contract expires between UPS and Teamsters, are they going to do this all over again?
Well, this will be a 5-year contract, which will take them out to 2028 if it gets ratified. And basically, the contract will have a no-strike provision in it unless there's a violation of some contract term or something like that. But I think this will settle the UPS matter for 5 years. The General Motors and Chrysler, or excuse me, Stellantis and Ford, if they agree with the UAW and they get that negotiation, that will probably be a 4 or 5 year contract. But you'll see others that'll pop up, like Yellow Freight. We're not through that one yet to see if 22,000 jobs are going to be lost. And frankly, the Teamster union, you know, the guy that's negotiating there, that's in charge of freight, he said if you can't afford the labor cost, then get the F out of the business. That's what he said to 22,000 Teamsters at Yellow Freight. That's not an attitude that seems like there's conciliation or negotiations going on. I think we'll see more of it as we move into the summer. We're going to see it in the school districts across the country as schools go ready to go back in September. We see a lot of teacher strikes across the country, whether they're legal or illegal. They happen anyway. So we'll see some more of that in August probably. And I think there'll be more contracts that come up where unions will press hard as opposed to, you know, looking at the environment and saying, hey, we should be negotiating and come to the table in good faith to try to keep things going for our employees and for our members.
Wow, seems like a lot of hurdles coming for the economy. But thank you so much for your insight today, Mark.
Appreciate it, Don. Thanks for the opportunity.